For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. American steelworkers, auto workers, farmers, and skilled craftsmen. We have a lot of them here with us today. They really suffered gravely. They watched in anguish as foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. We had an American dream that you don't hear so much about. You did 4 years ago, and you are now, but you don't too often, and for many years and decades even, you didn't hear too much about. Our country and its taxpayers have been ripped off for more than 50 years.
Well, that was some powerful imagery by Donald Trump. Today we're going to talk about why the current US tariff policy might be a short-lived phenomenon. This isn't just a policy critique, it's a look at the deeper structure of the US economy and how the global system actually works. We'll begin by looking at America's persistent trade deficit, then we'll shift gears to understand how US consumption shapes the world economy and why the rest of the world can't easily reciprocate with imports from the US. We'll also talk about how economies evolve from farming and mining towards services and intellectual property, and why capital and manufacturing naturally flow to the cheap labor markets. We'll then see how automation and AI are changing everything again, before concluding with a look at the long-term risks of indefinite tariffs, especially to the US dollar's role as a global reserve currency. So that said, let's get started. I'd like to start with the trade deficit first. It's a feature and it's not a bug. Let's start with the most visible number, the US trade deficit every year. America imports far more than it exports. In 2023, the goods trade deficit alone crossed $1 trillion. This has been going on for decades. It's not just a China story. The US runs deficit with most of its major trading partners, from Germany to Japan to Vietnam. You might then wonder, how can this keep going? The answer lies in what America is. It's a consumer powerhouse with the highest per capita consumption on the planet, which leads us to our next chapter. The American consumer is the world's buyer of last resort. In simple terms, Americans buy more because they earn more. The average per capita income in the US is over $80,000, purchasing power parity adjusted. That's 4 to 10 times higher than in many emerging economies. When you have that much spending power, you consume more goods, and often they come from abroad. But here's the twist. Most of the world cannot afford to return the favor. They simply don't have the income levels or consumption capacity to import enough American goods to balance the trade. This is structural, not the result of unfair trade practices. It's a global development asymmetry. While speaking about global development asymmetry, it will be very important to note that while $80,000 is the per capita income in United States, countries like India and others have per capita income which are much lower, maybe $2,500 per capita. So what happens is that the countries in which the political leadership has not been able to take the economy from agrarian to mining to manufacturing to services, they get the education and they find that they don't have career prospect within their country. So they migrate to countries where the service economy is thriving, and that's why US finds a lot of immigrants coming in either to study for higher studies and then staying on to work and to become productive members of the society. So right now, most of the problem is not just US is creating, but also the creation of the politicians who are running other countries as well. They need to develop their countries. And now, as part of having to develop their country from going from agrarian to mining to manufacturing to services, they need to protect the agriculture business. So they put tariffs on agricultural imports so that their growing economy, which is still very impoverished, can give employment to farmers, which is the easiest way of making some money. And that's the reason why the poorer countries put tariff. It makes sense for them to do that because they are trying to stabilize themselves. It will be advantageous for the developed countries to give them most preferred nation status so that it can help them to develop their own service industry so that their educated people can get better employment within their country and they become good customers for high-tech products which are exported by the developed countries. And that was the framework in which everything was operating until we have Trump and this tariff idea. So having said that background, let us look at how economies grow from soil to silicon. If we zoom out, you can see that economies tend to grow in phases. Poorer countries usually begin with agriculture and mining. As they grow richer, they industrialize, and eventually manufacturing gives way to services and intellectual property, which is exactly where the US is for the last 50 years. US is ahead of the pack, and it's at the pinnacle of economic success. Think about it. America isn't the world's factory anymore. It's a designer, marketer, software architect, and innovator. Manufacturing, once 25% of the GDP, now makes up less than 11%. That's not a mistake. That's the natural endpoint of development. Think about this. A guy who designs iPhone would make much more money than a person who is soldering the circuit board of an iPhone in China. So what is the point of hankering after manufacturing jobs unless they are of strategic importance in the defense sector or something like that? Blanket import of all the manufacturing jobs is not a worthwhile objective because it goes against fundamentals of economics. That's my point. And the other aspect we have to remember is that capital always follows value and value chases cost. Meanwhile, if you look at global capital flows, where it can earn the most, the cheap labor, favorable regulation, and large-scale infrastructure attract investment, and that's why Southeast Asia, India, and Mexico are becoming key manufacturing hubs. It's not that US companies don't want to produce at home. They just can't do it competitively at scale without rising prices dramatically. Imagine if iPhone was manufactured locally. Instead of iPhone costing around $1,000, it might end up costing maybe 3 times as much. And when you already have a high consumer price index, this kind of a situation will be a political hot potato and it will be an economic non-starter. Manufacturing is not coming back to US in my opinion, at least not with the jobs. Let us say we did somehow succeed with tariff and brought manufacturing back. What kind of jobs would it create? Not many, because at this point of time, even before physical AI is fully implemented, factories are already automated and they need less employees than they needed before. AI is already dominating factories slowly. A plant that employed 1,000 workers in 1980 today needs just around 100 workers, but with physical AI coming in, it may soon need even less. So the dynamics right now is that if someone was to invest in creating a manufacturing plant in the United States, they are not going to bring the old plants because creating a manufacturing plant is a massive investment, takes a few years, and once it is done, it's going to run for a longer period of time so that money can be recovered. Therefore, they would like the latest state-of-the-art technology in there, which would 100% include physical AI. And if they put physical AI, then they're not going to recruit as many people. So if we want to bring in those kind of manufacturing into US, it should be in the area of defense. It should be in the area which are of strategic importance for the security of the country. It should not be for manufacturing shoes or garments or making washing machines or dishwashers. Doesn't make sense. Machines don't vote, but humans do. And if we bet the future on reviving industrial jobs that are disappearing due to AI, we may end up with a workforce that is technologically displaced and economically frustrated. The illusion of indefinite tariffs is very, very important for this game to succeed. And here's the kicker. For manufacturing to return, tariffs must be permanent. No company is going to spend billions building a high-cost facility in the US unless it knows that cheap imports will never undercut it again. But if tariffs stay forever, other nations might simply move on. they will build trade alliances with each other and reduce reliance on the US market and innovate around the United States. Tariffs could become a self-isolating move, something the US cannot afford. One of the calculus that might be employed by businesses that think about setting up a manufacturing plant in the United States on account of this tariff would be that they would be looking at the size of the US market for their sector, who are the domestic competitors in the United States, and then they are going to look at the market share that is left for them to compete. And once they do the calculation, if they find that it's not worthwhile getting into the US, they may decide to go and invest elsewhere and build other markets. So that's one of the problems that could come up, assuming that the illusion of tariff being permanent succeeds. And this kind of a thing could probably create a risk for the dollar's role, because the US dollar is the world's reserve currency at this point of time, largely because America is a stable democracy and it runs deep capital markets and acts as the ultimate consumer of global output. But what happens when the US starts looking unreliable economically, becomes a protectionist economically, politically volatile, and instead of being diplomatic, it's more aggressive? You saw how Trump introduced the tariff with very strong words. The imagery was very brutal. So I'm thinking that central banks will start looking elsewhere, and I think they have already started that. If you look at the last quarter of 2024, lot of banks, central banks have been buying gold, and the price of gold has gone up. And also the dollar's share of foreign reserves has fallen below 59% by the end of 2024, the lowest in 25 years. However, dollar is still dominant, but the cracks are starting to show. If the world no longer sees the US as the anchor of the global trade system, the dollar's role would slowly erode. And that could be a big problem for US, because since the US dollar is the global reserve currency, a whole lot of volume of dollars is absorbed and US is able to run a big deficit. Without that, I think it's going to be very difficult for the US. So in conclusion, I will say that in the bigger picture, tariffs may sound strong, but they are fighting a losing battle against structural economic forces, because American consumers will keep demanding goods. Other countries can't afford to buy enough American exports. Capital will chase cost efficiency abroad. Manufacturing is becoming capital and AI intensive, not labor intensive. Indefinite tariffs risk global realignment, and the dollar's centrality is based on trust, and the trust can be lost. America's future lies not in turning inward, but in reimagining leadership for a new era, one that is driven by services, technology, innovation, and strategic partnerships, not tariff walls. The tariff declaration, the Independence Day declaration by Trump, has had global reverberations, and many countries are taking notice, and they are coming to the conclusion that US cannot be relied upon. Now, coming back to the central point of this video, I think that the political pressure is going to be so significant in the next few days and weeks that this tariff plan will have to be rolled back. Now, I'm looking at it from a retail investor perspective. Look at all the billions of dollars that have been lost by the likes of Apple, Google, and also the billionaires who own these companies in a big way. All of them have lost a lot of money. I think trillions of dollars have been destroyed in value in the last 2 days after this tariff announcement. And looking forward to all the complications that might come in terms of planning the growth of the company, planning improved economies of scale, progressing research, and all those things. It's going to be a big quagmire, and there is no guarantee that 2 years down the line Trump may decide to take off the tariffs. So the whole thing is very messy. There's going to be a lot of political pressure, not only from the citizens who will find things expensive and losing jobs, but also from the billionaires who are going to see a lot of erosion in the value of their portfolio. So I'm hoping that things will change, not in years, but maybe in days, weeks, or months. What do you think? You might be looking at it from a different perspective from the country that you're watching in. I'd like to have your perspective. This is my perspective based on the media that I have consumed and the books that I have read and my own understanding of economics. I'm coming at it from a retail investor point of view. I'm thinking that if we do any shorts at this point of time, we have to be careful and watch what's happening at the White House. So always we should be having an eye on announcements coming from there, because the market can turn around in a dime. And if I look at our S&P 500 charts, I think our bear flag target has been achieved. So there is no more bearish or bullish signals in the chart that is visible to me, which means that right now things can change. And that change could happen if this tariff is withdrawn or diluted significantly. Then there will be a relief rally. And at that time, if we are caught holding shorts, it will be terrible. So that's the point I'm trying to make. And I'd like to have your feedback. Put it in the comments. Let me have your thoughts wherever you are in the world. And even if you're an American who's watching this video, please give me your honest feedback of what you think is happening. Do you think the tariffs will be rolled back soon? Do you agree with my conclusion? So with that, my friends, I'd like to end this video here, and I wish you a very happy weekend, and I'll catch up again with you in the next video. Meanwhile, please do not hesitate to press a like out there if you liked this video, and if you're not yet subscribed, please subscribe, and please join me on the live stream at 7:45 a.m. Eastern Time on weekdays when I do a pre-market update of all the stocks in our portfolio. Thanks and have a great day. Bye for now.